Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. Happy shoot, is it only hump day right now? It is. It is only hump day. And I don't know if I told you guys this. It's crazy. We have these like huge trees in our yard. My two biggest trees in my yard are getting removed today. And my kids are like, why do you have such an attachment to these trees? And I'm like, because they're big and beautiful, but they blew over in this wild storm. It's like almost tornado-ish here in where I live, which is wild because last year we had zero inclement weather for our monsoon season. This year it's been amazing storms. So amazing as in like wild. But anyway, yeah, I'm kind of bummed out. I'm actually losing them today. And, I guess it's like I'm fond of trees. Maybe because I live in the desert and we just don't have that many. I don't know. Anyway, that's neither here nor there. You know what might blossom today is actually a short in the euro dollar potentially. I think if the euro breaks through 117, the next place we're going is 116.65, as I mentioned on the FA.C.E webinar. So, hey, Bran, how you doing? This is, I think, entirely possible today. And if you remember, was it last week? I guess. I'm trying to think about last week. It was I think it was last week, or maybe it was 2 weeks ago. I can't remember what it was. It was like a trying to remember every event that happens. It's like, well, it must have been the FOMC 2 weeks ago. And I was like, hey, if the Fed is like unexpectedly hawkish, I was thinking, maybe we'd see a move down here, but I was looking for a false break, and I'm still looking for a false breakdown in the euro. Not saying that I'm going to trade it. I'm not saying that. I can't guarantee you I won't. I'll have to see when or if we get there. But what I'm thinking is, if the euro reaches for this 115, or excuse me, 116.50, let's just call it 116.60. If it reaches there for today, I will be looking and watching very carefully to see if we get a false breakdown or not. Because I've always thought that we could break through here through this support and then reverse. Now, also, just take a look back. Just go back to September of 2020. You'll notice there are some lows down here that are really important. But this is where I think the euro gets kind of dicey, is below this 116. Okay, and that's why I'm thinking, hey, if we break through this support, are we going to find some buyers down there? And I think we might. And like I mentioned on the FA.C.E webinar, it's also due to this environment that we're in. We are obviously in a long equities, long risk environment, which you can't expect persistent dollar strength in a risk on environment. You just can't. So that's why I'm like, okay, well, maybe the euro gives us like a little false breakdown. So anyway, I'm not going to approach today with the intent of just buying the euro if it dips down to 116.60. But I'm just telling you what my opinion is here. Okay. Today's high right now is 117.30. So you can see this is also, previous support here. I'm going to get rid of that. But Okay, 117.30, but that's not the only level I want to write down. In case we squeeze higher, then we got to look at that breakdown point, which is 117.60. Okay, this is bearish. I'm thinking we are going to get an eventual breakdown. You know, obviously, I'd take you over the dollar index because of that chart, right? So while we're here, let's just, mark it up. 93.20 to oops. It's important. All right. I mean, we could obviously write down support here, but I'm just going to mark this, kind of rising trend line for now. 92. I think while we're above, like, let's just call it 92.70, you have to stay bullish. Okay. Sterling. Now we hit the 618 retracement, and that held. Let me get rid of this really quick. Now, look, if you are a cable bull, if you're a cable bull, and wait, hold on really quick. Brand said the euro dollar 117.50s have the 21 moving average and 55 period moving average. And this is on the euro. Brand, I'm going to just tell you, I'm going to tell you something just because you're newer to our community. So, and I just want you to know and he said, I'm kind of a noob. I'm going to just give you an opinion of mine. I'm really not a huge fan of moving averages. I'm not. But you'll notice that I have the 50-day and the 200 or 50 period and 200 period moving averages there. I keep them on my charts almost all the time. Okay. There's an old an EMA that's 48, the 48 EMA that I will put on from time to time. If there's a gentleman in our community, his name was Ron. He passed away a few years ago. I even brought him on as a guest on our webinar years ago, like 4 or 5 years ago. Captain Ron he always used the 48 EMA in our chat rooms, and I've known him. I've known him, the captain. I'd known him for probably 10, 12 years, probably about 8 years prior to him passing. I'm just pointing out 10, 12 years ago. He's always been in our community, my community. Anyway, he always used to use the 48 EMA. And ironically, the 48 EMA is one of the moving averages that you can watch it, really pay very close attention to, or the market really respects. But the reason why I'm saying all this is because I don't really care about moving averages, because I think moving averages, you have to find the moving average that asset class is actually respecting. Like, they don't always respect a 200 or a 50 or a 55 EMA or a, whatever you're looking at. You just have to find, there are certain moving averages that will fit certain assets. I always just keep the 200 and the 50 period SMAs up, because that is the most average, what most people are going to be looking at, most participants on a daily basis. So I tend to keep them on daily charts. This is the only chart I'm really paying attention to them. When I get into the 4 hour or the 1 hour moving average, unless I see like it is without a doubt 100% that a currency pair continues to respect a moving average, and I can go back in history and go, okay, on this particular chart for this particular currency pair, it has held it every single time, last 20 times, then I'll start paying attention. but for the most part, I'm not even looking at my moving averages. Okay. So anyway, just letting you know my opinion. That's why I really don't reference moving averages a whole lot, unless it's on a daily chart and it's a 200 period moving average or a 50 period moving average, and we're seeing it respect quite a bit. Then I'll say, let's pay a little bit of attention. Anyway, sorry, I got on a little bit of a tangent there. I got to get through charts. I'm sure Stelios is probably listening in saying, I've got something to say about that. And if you do,
I'm wondering why you don't plant new trees.
what?
You
Oh,
can,
I will.
Okay.
I will plant. Well, so here's the thing about that. We can't just plant trees without thinking about it. It's too, we have to master plan our yard because we live in the desert. So that means we have to plan where our,
yeah, I get it.
Yeah, our sprinklers are going to be sprinkler systems. So we have to master plan it. It's not let's just throw in a tree.
Sure.
I wish I lived in a wet enough environment where that was possible. Anyway,
yeah.
So that's the reason why. So that's what bums me out. It's like these trees have been here for like 20 years, 30 years, and I'm like, man, it's a bummer. Okay, so anyway, you guys probably see cable held. This is obviously very important today, so I'm going to write that down. This is 137, basically 137.15. That's got to hold. So I'm going to write 137.15, and I'm going to put an asterisk there because I'm going to tell you guys, if we break that, it becomes instant bearish because we've been thinking, oh, range bound. Oh, hey, we got a little head and shoulder pattern maybe developing here. False breakdown over here, so that could give us the head and shoulder. Yeah, that's all fine and dandy unless we break this. Then we break that, then all bets are off for even thinking about being on the bullish side for the sterling. So this chart right here, the bias will flip from being range to bearish on a close below 137.50. I'm just telling you right now. Also, one of the other things that you got to be thinking about with the sterling is if we break through the support, it might be dragged down because the euro broke through 117. Right? The euro breaks through 117 and we hold it kind of like the Aussie did yesterday below 72.90, then the sterling's going to have like no other choice. It's going to be drugged down by its pigtails. It's just going to happen. So anyway, that's just my thoughts. This previous resistance, it's got a hold now. So this is 138. Let's just call it 138 and a quarter. By the time you get up there, keeping us in range, Aussie is bearish, as you all know. We are not too far away from some longer term targets here. So 161% extension, 72 cents. So it was our next stop, 72.05. Let's just call it 72 cents for today. And while we're below the flag here, so that's 73 and a quarter, it is bearish. The one thing that I've tried to play the dollar counter trend yesterday. Doesn't work. Does not work. I tried to play the euro on the long side yesterday. Doesn't work. I mean, I guess you can. You just keep picking it off when it gets down to 117, but at some point you're going to be wrong. At some point it's just going to break through and you're going to go, crap, why was I doing that? Kiwi. So the Kiwi, notice where we stopped overnight. In Europe, I say overnight, but in Europe, previous support, current resistance. That means we have to stay below here, which is 69.55. So as long as we stay below 69.55, the risk is lower. Now, I'm not going to flip it to bearish until we close below this support, but that is the risk. A break below 68.70. Today's low 68.68. I'm going to write down 68.70. Put an asterisk. We close below that. It's game on. Dollar Canadian, bull flag pattern. CPI doesn't matter. A break above 126.60 is going to be very bullish. 126.60. This is, oops. Major resistance. And we're going to flip to bullish on a break above that. And then while we're above this triangle, oops, shit, I don't want to shoot. I meant say what while we're above here, I don't think there's any reason to be bearish now. 125.75. I'm not going to flip us to bullish yet, but I don't, like I said, while we're above this 125.75, I don't think there's any reason to be bearish. So I think you can, even if we get let's say stocks rip at the open and the dollar comes under pressure, then we dip down here. Think of that as like a gift from the Greek gods. Have you guys ever heard the Greek gods before? Stelios has heard the Greek gods.
Oh, I don't know how you do it.
The dollar Canadian gets down to 125.
That's disturbing, man.
Well, almost ran out of breath there. Okay. It is disturbing, isn't it? Wouldn't it be crazy if you heard that? Oh, that was easy. Oh, okay. So 91 cents for the dollar Swiss. We're right up here against resistance, but the 92 continues to be resistance. I think that's what we wrote down yesterday, and I don't think we should change that. It's in between fibs, but that's all right. I'll just write down 90. Wow. 91. 2. Dollar Norway. You got to continue to buy dips here. And I drew this out yesterday. You probably saw it on your charts. This is a Gartley pattern developing 618. Look at this 618, 786. Now the 78% retracement would be right there. Or we can extend it out to 161% extension and give us an 88% retracement possible. So a move above 892 should put 902 in play, but we're going to call that 893. And then while we're above, you guys know 870, but oops. Intraday. Think about this like this is flagging. Intraday, we could drop maybe to 885. You remember 885 was a resistance on the way back up. That would be support on the way back down. And that would be bull flagging if we do this. Move that. Dollar max. We break above, well, remember 20 was our resistance yesterday. We break above 2002, 2003. That'll put 2025 back in. So I'll just write down today 2003, 2025. We're in a range. 1980, but you guys know 1970 is the big support. But we're just going to keep that in range. Dollar yen. Remember, 110 is resistance. Support is 109.15. 109.20, 110 range, correct. Silver, oh, a little head and shoulder pattern there. Really minor, and I you guys know I don't like trading them as continuation patterns, but just that doesn't mean it won't play, right? $24. I know we wrote that as resistance, right? That keeps the bears in charge. $23.40. Gold epically failed yesterday. Previous support, current resistance. So I know we've been writing down 1790, but we're going to write down today 1795. Did we write that yesterday? Did we write 1790? We wrote 1800. You know what? That's probably the right call. Oh no, I'm going to just keep it at 1795 because we wrote 1800 yesterday in case of an overshoot. We did get the overshoot, but we only overshot to 1895. So that becomes important. This now reverts back to bearish, and the next support is 1770. Bitcoin, same old crap. 42,500, 48. Okay. 48,000 is pretty key though. I'm going to put an asterisk here. The reason why I'm going to put an asterisk there is because this is the 618 retracement. So it's now becoming pretty important resistance. And that's good to know. I mean, if you're trading Bitcoin, because if we break above that, that opens the door right to 53,000. So, I mean, if you're trading crypto, that's good to know because there's like, in my opinion, there's a 5,000 point, like, hole here that needs to be, that could be traded into. So, I mean, knowing where the next 5,000 point move in, an asset class like Bitcoin, great. That's right. That's money. S&P. So we will continue to write down 44.95 and support now is at, well, actually let's write down a couple levels. Yesterday's low. I'm going to write down 4,400, 43.75, obviously. So 43.75, that's key. 4,400, then 44.95, and it's bullish. Okay. Bias chart is done, completed, finito. It's all yours. I hear Steve is around.
Yes, he is. Can you hear the waves? Crashing waves.
I was muted. What the hell are you talking about, guys?
What's up, Steve? How's it going over there?
Other than, I'm a little bit troubled because internet today seems to be misbehaving more than usually. So I'm a little bit worried about the day.
You know what? It is going to be devastating if you have to leave us to go swim.
I know. It's going to be
devastating. We won't even know what to do with ourselves because it is so active in the markets. I went to sleep and I got up and the Aussie yen had moved 8 pips in like 7 hours. That's how much you're missing. So you know what? We won't be disturbed if your internet goes down and you have to go swimming. on your home. So, anyway, hey, Steve, enjoy your time. Stelios and Steve, I'm going to pass it to you guys. Stelios, you got the screen, right?
I got it. That's
Okay,
posted
cool.
already. Thank you.
All right, guys. I'm going to go feed my animals and kids, both animals and kids, and then I have my tree guy coming over here within the next 20 minutes to bring out his chainsaw. So I'll talk to you guys soon.
All right, bro.
Okay.
Thanks, guys.
Feed your animals and attend to your tree guy.
Yeah.
He has a pool
That
guy,
sounded kind of weird.
a pool guy, a tree guy. This is the life, man. Okay.
Yes.
So
We all want to be Blake.
it's been a pretty quiet day actually after the RBNZ shenanigans, but I'm looking at the markets and unfortunately have nothing new to say. So yields are still roughly where they were. A couple of base points up or down was not going to make any difference in the 10-year US. Equities are hesitating. They're not going down, that's for sure, but they're hesitating. I mean, currencies, the euro dollar, I'm looking at the lows. What were they? 117. I think 117. We're close to these lows from March. If that goes,
I think we have more downside towards next target is literally 115.
Yeah, exactly.
It's another rounded target.
But I don't see a convincing break ahead of Jackson Hole. The question is, what happens if Jay Powell is dovish? What happens if he doesn't give any guidance on the taper, or if he sounds more dovish than markets expect? Because we are now kind of expecting the Fed to start tapering, probably year end or close to. Mm-hmm. So what happens if he's not if he's dovish? I think then the euro just flies and stocks fly and we continue.
Let's see if Elias is right. He told me now it's like at least 2 months ago.
Yeah.
He told me 2 months ago that central banks will the major central banks will start hiking in September.
Okay.
He was an ex-BOE economist. He's he's a shipping advisor now. He focuses more on economic cycle, having to do with shipping companies.
Yeah.
But he follows closely like economic, of course, developments all over the globe. And he told me he believes September is probably when they're starting. As I've said before, though, for me it's of secondary importance. If it's going to be September, October, December, whatever, but it's more what they will do and the extent
and the nature of the tapering. Yes, exactly. Yes. The nature and the pace. Yeah.
Yes, exactly. So I think that's going to be far more important than I don't think there is a question. I mean, the vast majority of market participants understand that there's going to be some form of tapering. Eventually there might be another attempt to hike rates.
Well, but the question is, and I was speaking with a friend of mine discussing the Fed, and what I said at some point was, if they don't taper now or indicate that they're going to be hiking afterwards now when inflation is running rampant and we're recovering from COVID, okay, obviously it's still an issue, the Delta variant and all that, but the death rate is dropping, everything is dropping. So if they don't start doing it now, when are they going to do it?
Never. If not now, never.
Yeah. So they want to, central banks, they always want to have ammunition to cut rates. At the moment, they have nothing. They can only just do more of, they can do negative rates, of course, or more QE. They always want to have something to throw at the markets. So they're going to want to taper. They're going to want to hike. The question is what reaction.
Yeah. Although to be fair, Stelio, I mean, what kind of ammunition are we talking about? The previous time they hiked, they made it roughly to 2%, right?
Yeah.
So, and they managed to, in essence, shrink the balance sheet incrementally. I mean, we managed to go from like 4.5 trillion. What was it? Something like that. Back to what was it? 3.8. I think we managed. before reversing. And I haven't actually checked due to vacation period. I haven't checked the balance during the past few weeks, but last time I did check, we had already surpassed 8 trillion. I remind you that my prognosis about the size of the balance sheet at the very beginning of COVID was that by the end of this year, we're going to be at 10 trillion. I still feel
that's
more
a good, that's good.
I still feel more or less confident about that. Yeah, it might not be exactly 10 trillion, but I think it's going to be more or less there. So yeah, I mean, basically what I'm trying to say is that I don't think we've gone past the point that acting in advance gives space to have more ammunition, because they literally create more ammunition. I mean, they shrunk the balances from 4.5 to 3.9. And once they needed to expand it again, it's not that they used back the 600 billion that they shrunk it, right?
Yeah.
They double it, literally, more than doubled it already. And who knows, when the end is going to be. So, it's going to be QE infinity in infinity quantities.
That's a scary thought. Yeah. Yeah, I don't have much else to say. It's more of the same. And we really are just waiting for next week, Friday, Saturday.
Until we get that, perhaps it's going to be a non-event, and then we're going to be looking on the calendar to find what the next event.
The next FOMC, yeah, exactly.
Yeah. And where's the next CPI, the next FOMC, the next NFP print?
Jesus, no, I can't handle that.
Yeah, it's unfortunately, summer conditions, especially under circumstances, are kind of horrible for us traders, but it is what I can't really complain, because it makes my vacations a lot easier. So just for this period of the year, I can't really complain. But in general, I would so much want to see back the markets we had like 10 years ago. I mean, it was such an easier job finding things to trade, instead of forcing yourself or sitting on your hands and hoping you're not going to do the mistake of trying to jump on something that's not really something new happening. In any case, since yesterday, from a technical perspective, we haven't had any real big development, but we have had big developments having to do with the technical picture. But we have had a few 2-3 things that are worth noting. One of them is that now the Aussie is back on this channel's trend line support, as you see here, the blue one, the bigger one. So we closed the day yesterday there. Today we had like a minuscule attempt of a little bit of a rebound earlier, and we've already given back all these gains, these few gains, and we're going negative and testing this trend line again. So this is definitely one pair I'm looking as we speak. The other one is the Kiwi. I spoke yesterday about this rectangle. Now somebody can move support to these lows over there, which also coincide with the 61.8. In any case, we've broken through this trend line support. We're currently testing the 61.8. I think below the 61.8, we should be looking for at least another 160 pips of downside towards 67.14. So that's what I would be looking towards in the case of the Kiwi. Now, I know that it's not something that's regularly in our radars or something that people regularly trade, and for a very good reason. But it is also worth noting that after a rather prolonged period of depreciating within this channel, although keep the big picture in mind, the big picture is that we're within a much, much, much larger channel. But in any case, after a long time depreciating within this channel, we saw a reaction yesterday and today, which shows that perhaps we're finally going to be seeing some proper rebound in the Aussie Kiwi. So from a technical perspective, finding support at this previous low after a little overthrow in this channel and seeing this type of a reaction, I think it's a very decent risk reward opportunity if you want to be trading something that's not really volatile, and on the other hand, it's not really correlated with the dollar. So, if you don't have like a clear position at the moment, which makes sense to be honest, and you want to trade something that's uncorrelated with dollar, perhaps Aussie Kiwi is something you want to try here. So, the Aussie and the Aussie Kiwi was two of the things I wanted to talk about. The other one is that the DXY, now of course, depends on how you draw the line, but incrementally did close above this trend line resistance yesterday. And so far today is practically unchanged, right? We're like 0.02% negative on the day, which is practically unchanged. So I'm still waiting to see what's going to happen here. Obviously, not coincidentally, it's at the same time while the euro is testing this important 117 support area. So these two are going to go together if they do, right? So if euro USD breaks 117 and gets on its way to 115, then the DXY would be cleanly breaking off through this trend line resistance, and we will be on our way towards 94.50 to 95, which, as we've said, is the next area you should be looking for the index to find resistance at. Now, having to do with metals and commodities, now I did some, I had a look at them earlier on the day, and first of all, clearly no real developments here in gold. Keep in mind that gold has now rather approached this channel line resistance. So from a risk reward perspective, if you think there is more downside here, risk reward has started becoming interesting once again if you're looking for shorter term short positions. In the case of silver never really had the type of rebound that we saw in gold, which had a lot more momentum and looked a lot more healthy. But in any case, above 23, it's not easy to look towards the other side. Now, admittedly, if it wasn't for the importance of 23, just by looking at the shorter term chart, silver seems like it's consolidating its prior losses, and it's very likely to push lower once again. And yes, it is a possibility. And I think it's going to be great in a sense if the market takes out 23, because a lot of people are monitoring it and its importance. And I'm pretty sure a lot of people that are bearish for XYZ reasons, the precious metals, are going to go ecstatic if silver breaks through 23. In my opinion, it's going to be a false move, and it's going to trap a lot of people being in the wrong side of the market at the wrong time, because in my opinion, we're much closer to the point that gold and silver are going to resume their uptrends than anything else. So keep that in mind. Now, I talked yesterday, I said that one of the most important developments is that palladium seems to be breaking below this trend line support, and we did end up having a quite a massive day to the downside, and in my opinion that has already opened now the door for more losses. The next downside target being this. I drew a parallel line to that one in case this is a channel, in case this proves to be a channel, right? Roughly 2300, 2350 is where support is. So that would be the next downside target. Although I wouldn't be at all surprised if we slash through that as well. So keep in mind, I think palladium should not be faded at the moment. It's doing what it's doing now. It's, we need more time to figure out if this is like a larger corrective move lower, or if this is, some kind of a, shorter term corrective move, or a big reversal or something. But for the time being, I wouldn't fade weakness. I think we sliced through the 200-day moving average, and prior to that, one day prior to that important trend line support. And in my opinion, you shouldn't try to fade this. It's rather dangerous. Now, I also had a look at copper and had to do some redrawing here. If you notice, copper is breaking down today from this trend line support, in case that was a symmetrical triangle, right? So this opens the 200 daily moving average at 405 next, and this parallel trend line to the symmetrical triangle trend line resistance. So the possibility of this being a channel, more or less the same type of logic we just explained in the case of palladium, right? And with trend line support currently passing from 390, don't forget that 385, which this trend line support is going to be there in a few days, since it's a descending one, is also an important horizontal support resistance area. So, 385 seems like a very, very likely downside target in some type of a bigger type of corrective move that's currently unfolding here. So keep that in mind. Now having to do with crude oil and natural gas. Crude oil still toying around with this trend line support, not cleanly slicing through it, as we saw, for example, happening in the case of palladium, right? But if we do so, which is a rather decent possibility, then you should be looking towards $62 for the time being. Don't forget, I've explained that before. If we're talking about instruments like palladium, copper, crude oil, they do have some things in common. The main one being that they all were in massive uptrends, right? And yes, at some point, it's the healthy thing to do for them to have a proper corrective move that's going to unfold both in time and in price, or in one of the two at a bigger extent. If sometimes you get a very sharp corrective move but doesn't last long. Some other times you get a corrective move that lasts for a long time but doesn't retrace that much. But the most normal thing is to have a combination of the two, right? After a big uptrend, both in time and in price, the more normal thing to see is to see a decent corrective move, both in time and in price, right? So perhaps that's what crude oil wants to do here. So for the time being, in the short term, I won't be trying to be in the long side, not yet, right? Let me see if there was something else I want to say. Yeah, yesterday, oppositely from the day before yesterday, we did manage to get a rather okay, we have redefined what a proper move lower is, to be honest. But let's say we had somewhat of a move lower in the indices, which for a change they didn't manage to completely retrace by the end of the day. Right now, the question is this the beginning of something bigger? Here's the S&P, here's the Nasdaq. Right now, the answer to that is, as I've said before, you have to acknowledge that the S&P is the global barometer for risk. So I would have to say that 4380 is the level at which I would start believing that there is some kind of a proper move unfolding here, because that's the level at which we're going to finally break through this ascending wedge trend line support. And that's the only technical development that's worth noting at the moment, right? Anything between the trend line support and where we are, in my opinion, is just noise. So we see what happens from there. Until that happens, I would be rather cautious in trying to be aggressively short. Yeah, sure, you can be short against the day before yesterday's highs, I guess. But how many times could you have done that in the past? And the vast majority of times you would have lost money, right? So the logic is not trying to find an extremely short-term high on a short-term time frame and say that, oh, I'm gonna be short and put my stop loss above that high, because why not? Risk reward makes sense. Yes, but when you do that against the trend, in a very, very strong trend, each individual of these trades is going to have a decent risk reward ratio, but the totality of all these trades are going to be like one big bad trade. You know what I mean? So bottom line, I would be waiting for that development to happen. If it does, before I even consider taking the other side of the market. That's my point there. Anyhow, I think that's more or less what I had to say. So I'm going to be more than happy to have a look at your questions now. How much better do you think the markets are going to get after summer low lens, natural gas and AMD? Okay, now how much better I think? Listen, I think that this period of complacency following the COVID response is naturally coming to an end. because the amounts of stimulus that have been thrown in the economy have to be reduced. I mean, there's no alternative to that. And the market has now been spoiled to a type of continuous stimulus and zero rates that cannot go forever. So although I do believe that the monetary policy is going to remain as accommodative as possible given the circumstances, I think that the market is not going to like the readjustment to whatever the new reality is going to be. I also think that there is going to be soon some type of a realization that the insane amounts of stimulus thrown around the world have not really saved the world from the problems and the economic damage of COVID, right? So I do think that the year ahead is going to be a much more interesting year than the year that passed. I can tell you that much. Now, me attempting to tell you when exactly that's going to happen and, what's going to be the week or month, that would be, me trying to play the, the prophet, to be Nostradamus or whatever. And, that's not the business I'm in. So, that's as much as I can tell you. Oh, yeah, one more thing I forgot to mention, since Samira is asking about Ethereum specifically, is that earlier on the day and yesterday, we had some sell-offs in cryptocurrencies, right? Nothing magnificently. Here is Bitcoin and here is Ethereum. We seem to be having pullbacks for the time being. Nothing really, extraordinary happening. I mean, we did have some RSI divergences and extremely overbought conditions. We had indicated all that. So let's see now if these are, just pullbacks in a bull market, which is, likely, or something else. In any case, we drew that some time ago. For example, in the case of Ethereum, we did surpass a little bit this horizontal support resistance area, and we did stall at the 61.8. We're now pulling back. How far can we pull back? The answer is 2,500 in the case of Ethereum is the line in the sand, if you're asking me. But prior to that, we have this horizontal support resistance area, which has been playing out as we speak, right? Now, likely we're going to need a deeper correction than this, but let's say this 2,900 area might prove to be enough. I guess we're going to soon find out. In the case of Bitcoin, 42,500 is a pivot area. So, you can be bullish about 42,500. Now, below it, things get a lot more complicated. Yeah, natural gas. I actually didn't mention today natural gas. I mentioned everything else. Natural gas is back again at the 380 area. As I've explained, this is undeniably the first area of support. So, being short exactly on support makes no sense, right? Now we slice through 3.8. I think we opened the door for 3.4 and a deeper corrected move, right? I'm still bullish, medium to long term natural gas. I just think that it's not unlikely to see a deeper corrected move before we start pushing new highs. We had a very, very strong uptrend prior to this, and at some point you need to have counter trend moves. Now having to do with the other two, which was AMD and low. I'm assuming low is an equity ticker. Let me start from that actually to confirm. Yeah, it is, and from what I see, we've seen it before, right? It seems to be breaking out, right? It never made it back down to this channel trend line support. It actually finds support just above the 200 daily moving average. It has been in a strong uptrend and it seems to be breaking out. So yeah, that is definitely a bullish development. I mean, we stay above this trend line resistance, and I see some momentum during the past couple of days, post earnings, that is. So earnings might have been the catalyst for a bullish breakout, in which case, next upside targets here are, let's see. There you go. These are the next upside targets, right? 224, 236, more or less. Those are the two more important upside targets from there. And AMD. Some type of corrective move unfolding here. Let's see. Perhaps something like this. Right? You see what I mean? Something like this. So clearly, we've entered a corrective type of move, and a very good likelihood that corrective move is not over yet. I will be looking towards 100 next, 99, 100 as next downside targets. Anything else, guys, gals? Anything else you want us to cover? Zoom. ZM. Yeah, testing support as we speak. A breakthrough this triggers a double top because we're in a rectangle, and the double top target is at 280. As simple as that. So yeah, we break through this. We're looking towards 280, and still clearly within some type of a bigger corrective move. DNNGY. What the hell is this? No clue. And we also just had earnings, and earnings, from what it seems, were not enough to take us out of our misery, having been confined in some kind of a rebound that doesn't seem impulsive. I would be very careful with this. I mean, we had a strong move lower, right? We did turn higher. Momentum is very lacking, and that is worrying. I think there's a big danger that there's more downside here. Yeah, that's all I can tell you. I would be very careful if I was long this. Very careful. I wouldn't be even surprised if it just collapses at some point. I don't like this type of a move higher. And as I said, earnings didn't do anything really to help change the picture here, right? So now that earnings are also out of the way, I don't know, perhaps this corrective move is about to run its course. Perhaps. LYSCF. My pleasure, Laura. Okay, this one broke out some time ago. We were clearly monitoring this for quite some time, right? So this had a very clean bullish breakout. We achieved the first upside target we were looking for, the 127% extension, and we clearly see some decent move lower. We first created like RSI divergences and all, right? And we clearly see some type of a corrective move unfolding from there. With some chances of this being more than a corrective move, right? Because we satisfied the minimum, we satisfied easily the minimum expectation out of a triangle, right? We produced a higher high. We even comfortably sliced through the 127% extension. made an attempt to go towards the 161.8. We didn't. And now we're in some kind of a bearish move that's probably still in its infancy. So it's very early for me to say, you know, if this is going to be some kind of a corrective move or something different. So bottom line, if you bought the breakout, you made some good money. This is not the time to be long anymore or to try to buy it, because I don't see, I see this move being still at its very early stages. And even if it proves to be corrective, it is very likely that's going to take us deeper before we can find the low. That's what I think about it. Moderna. Okay, Moderna is clearly trying to stabilize. Had a very nice candlestick yesterday, but my assumption is that it's likely that we're not done correcting lower, because, you know, these type of parabolic moves usually have, you know, very decent corrective moves. So would I be buying it, being satisfied that we already found the low? I would be very careful. I'm not saying it's impossible to have found a low in this corrective move, but I'm saying it is unsafe to assume so. Okay, so we need more. We found resistance again in this previous congestion area, right? We might need to see lower prices. I can tell you that much. Yeah, so we'll have to revisit this after seeing more price action. Oh, Thomas also asked for IWM. I missed that. So the Russell, let's have a look at the Russell. So the Russell, clearly having underperformed both the S&P and the NASDAQ, but still not really bearish, right? Still holding above the 200 daily moving average, still holding above this previous low. So yeah, I would be somewhat careful here. And clearly, if you want to be long, the IWM doesn't look like it's the best instrument to do so, right? And perhaps somebody can make a claim that this was some kind of a corrective pennant, right? So yeah, there is a technical scope for more weakness, but I would still take my cue from the S&P for when we're really entering, you know, some kind of a bearish window for risk assets. And yes, once and if we do that, not if, at some point it's going to happen, clearly. Once we do that, the IWM seems well positioned to suffer more, right? Because it clearly underperforms. So it, you know, there's a good likelihood it's going to underperform also during a sell-off. So yeah, perhaps you want to be short the IWM instead of something else. You might take your Q out of your technical Q out of the S&P and end up shorting the IWM. I see nothing wrong with that. Okay, guys, girls, nice being here with you. I hope you have a wonderful rest of the day.
Thank you,
and I'll see you again tomorrow. Bye, Stella.
Cheers, guys.